Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and we have a full lineup for you today. Luke Falasca is going to give us a broker update. We also have Andrew Cox here with us with a shipper update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and today we're going to talk about those tender rejection rates continuing to climb up a little bit as we approach the midweek here. We've got our van and reefer outbound tender rejection rates here behind me, up to about 7.84% on the reefer rejection rates, up about 34 basis points from 7.5% yesterday. Van rejection rates up to 4.64%, up just a slight notch versus yesterday as well. Again, it is interesting to see that capacity does continue to tighten a little bit more seasonably, as you would say, this time of year, especially as we approach June and the peak and the Memorial Day week, of course, we haven't seen the supply side contraction as much as we would have normally seen in years past, but we are continuing to see some reefer rejections and van rejection rates increase slowly as we come out of Memorial Day weekend. So where are the volumes continuing to increase? So I've got our outbound tender market share tree map pulled up behind me. This is a good way to view things when we're seeing that holiday impact. You know, the outbound tender volume index has a 7-day moving average in it, so it does trough out for a week. So this is a good way to view, for you Sonar users out there, a good way to view volumes this week as we see it enables you to see where volumes are increasing relative to the rest of the country. And Ontario, California, of course, continues to be a big outperformer for the rest of the market here. We also have Atlanta, Georgia, the big southeastern hub, showing up an 8.4% market share increase week over week. So again, two of the biggest markets in the country driving volumes higher throughout this week. So not necessarily unexpected, but again, a good mix of markets out here that are continuing to increase volumes as we do see. If you're a carrier out there operating in the Chicago market, you will continue to see some decent volumes coming out of there. Indianapolis, 9.2%, a pretty strong increase as well. Let's break down our two big markets. Ontario, California, of course, the big one. Now this, the van and reefer outbound tender rejection rates for Ontario are, of course, extreme since the beginning of May. So this is down. Look at where we were on early May. May 1st, we were under 1.5% on the van outbound tender rejection index for Ontario. Now we're sitting at 6.71%, well above the national average by about 200 basis points. So it's a pretty, that market itself has continued to show a lot of tightness, especially in the Southern California markets. Now reefer rejection rates hovered around this 15% range for a little bit, then took another jump up, and now they continue to rise again. So reefer rejection rates, 17.7% out of the Southern California market, one of the biggest markets in the United States. So this is a tremendous amount of reefer rejection rate. So reefer carriers out there do need to pay attention to the spot market, as it does appear that capacity is extremely tight out there right now. So anything else up here? We've got the head haul volatility, a 112 on the Ontario market. We had seen this market really die out in the early part of the year with a trade war diminishing and all that. So we saw that head haul volume go all the way down to about a 50 to 60 in the Ontario market earlier in the year. Now it's all the way up. It's back recovered to where we were seeing it this time last year in over the 100 volume point. So head haul index really showing a strong undersupply situation performing out in the Southern California markets. Tweener rejections leading the way at 10.6%, 9.25% on the mid-haul rejections. So anything over about 250 miles, 800 miles, seeing the highest rejection rates out of this market. Atlanta, moving on to Atlanta, we've got van and reefer rejection rates both ticking up there. However, the reefer rejections not as responsive as we saw in the Ontario market, sitting down there around 4.94%. After having an early or a mid-May bump, if you will, they have recovered slightly. Van rejection rates, however, did take a pretty sharp increase up, about 69 basis points day over day. So anybody operating in the Atlanta market today, make sure to pay attention to that spot market. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. This is your Wednesday broker update. I'm Luke Falasca, and today we've seen a little bit of sluggish movement, but also a quick recovery here from the Memorial Day dip in volume. If you look here in blue, you have the overall volume levels in the United States. Again, we saw this massive surge up from that recovery since the coronavirus, and then we dipped down to the Memorial Day holiday. That's to be expected, but it looks like we're starting to bounce a little bit as we get a few days behind outside of Memorial Day. That green line there that you see overlaid on top, that's going to be 2019, so you can see that effect. So it looks like volume levels are actually looking a lot healthier right now than where they did this time last year. We've had less of a dip from the Memorial Day holiday, and we're already starting to see a faster recovery. So that's really good news. Hopefully that will continue. Time will tell. Rejections right here we're looking at, right? So in blue, you have the overall tender rejection level sitting at 4.61%. That's continuing to rise, which is good. So that's going to tighten up capacity as that number continues to rise. Keep in mind, it is still pretty soft and low. So capacity isn't necessarily tight right now, but it is tightening up in some areas of the country more than others. The green line here is actually reefer tender rejections. So as those tender rejections continue to rise up, and they've seen continued increase here over the last few days, seen a new high since the coronavirus dip. We're sitting at a little over 8%. That's actually going to continue to tighten up rates. You'll start to see spot market rates rise on tender rejections. So as that number continues to push up, you'll see tender rejections rise, especially as we get into the heart of produce season. I would expect that to further rise. On our map here, we've got the outbound tender rejection weekly change. So remember, the markets in red are where tender rejections are decreasing, which is also going to drive spot market rates down. The markets in blue are where tender rejections increase, and spot market rates will increase along with that. And then the white markets are relatively unchanged, no real change week over week. So see over here in California, California is mostly blue. It's seeing a lot more tightening, especially as volume levels continue to rise out of California, but for the most part, all of California is blue. Also see a lot of blue here in the middle of the country, Oklahoma, Kansas, Nebraska, a lot of those areas. Not a ton of volume in those areas, but it is still very blue. And then the southeast is actually seeing some tightening as well outside of Atlanta, mostly kind of around, Alabama, Florida, Georgia, some of those northern areas there, and the southeast like Tennessee, seeing some tightening. But the area we're going to focus on the most here is actually the northeast, which is seeing the greatest tightening in tender rejections. You're talking Boston, Connecticut, New York, all these areas right here are seeing the greatest tightening. That's going to tighten up capacity and really drive up spot market rates. I'd actually recommend calling on shippers in the Northeast today and this week as that capacity continues to be tight. They may have some trouble finding capacity to move their freight, and you might be able to come in and be here today. So that's where I would focus your calls for today, the Northeast as well as California. Now, we're going to look at something a little different. Rather than looking at a specific market, what I want to do here is look at this volatility table. Now, where I want you to look right here is in the middle. The middle column says outbound rejection volatility. That's right there in the middle. You see that full green line there in the middle. That is going to show where the greatest increases are in tender rejection. So you're talking Boston's up top with an 8.5% increase, sitting at 11.4%. Right below that, we have Hartford, Connecticut with a nearly 6% increase. Below that, you have Springfield, Massachusetts at over 5.5% increase. Those are the areas there that are seeing the strongest increase in tender rejections, all up there in the Northeast that we just saw on the map. They are the darkest green. As that continues to drive up, remember, spot market rates will rise out of those areas. So if you're moving freight out of any of these areas today, you should be able to get away with increasing your spot market rates. And that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your shipper update. I'm here with Andrew Cox. Andrew, what do you have for us?
And we're talking a little bit about consumer confidence. It actually held steady in May after plummeting in March and April. This is, of course, the Consumer Confidence Board, the Conference Board Consumer Confidence Index. And there's a couple different segments that comprise this index. One of them is a current conditions part of the index, and that one actually did slide a little bit further in May from April. But if we look at the expectations portion of the index, it actually did grow in May. So the big picture here, I think, for me, is when we look at the consumer confidence net drop from 2020 and compare it to the net drop that happened in the last recession we had, it really only fell about 60%. And I think there's a few reasons for that. One, I do believe that people are really, truly believing this will be a short-lived thing. That's why that their expectations index is now growing and people are expecting this to get better in the future. But I also think the stimulus checks and the government unemployment benefits are helping kind of prop up the confidence, especially now in May that people are getting back to work. And really you can see that as well if we look at the consumer spending data from Bank of America. As I've been speaking about for the last few weeks, it really started getting a lot better towards the beginning of May in the last few weeks. I mean, we now only have total card spending down roughly 12% over the last week, year over year. So I think this is really good. I do think confidence is being propped up a little bit by the government. So we're going to have to see where this leads us when this money runs out in August. But right now, consumers are feeling a little bit more confident.
And you bring up a really good point there, right? You know that the benefits run out in August, and so that's a big talking point, whether they get extended or not. And if they are extended, will it be the same amount? The other talking point is that's really taking headlines, and a lot of people are thinking about it, a potential second wave.
Yeah, I mean, we've seen a lot of people out and about this weekend, from the Lake of the Ozarks to other things. This is all going to be kind of contingent on us not having another outbreak. I mean, my hope, we see other countries, Germany, ease their restrictions, and we've seen similar things happening over there, and they haven't had much of an outbreak. So my hope is that the warm weather and the outdoors can help curb this. But again, it's all going to be dependent on whether there is that second outbreak.
Right, and we can see some of the areas and segments here that are struggling. One of the macro releases that have been able to produce, besides grocery and online stores that we've seen of late, new housing sales. And so one of the areas that we've mentioned that would come back, manufacturing and housing, of course. Good to see that housing is somewhat staying resilient in this time. Yeah,
I mean, there's some mixed bags there. There's a small amount of homes for sale right now because people aren't willing to sell. They're trying to sit on it. But you also seen a lot of people moving from the big cities, from New York or from San Francisco. This whole work from home movement will allow people to work from wherever they want. So I think you're going to see a lot of people moving from those and trying to get more bang for their buck, moving into homes. Probably the South and the Southwest will be some really big benefiters of those.
That's a great point. So a lot of these individuals are looking for sometimes bigger homes, because when we see at these new home sales, a lot of them aren't first-time home buyers like existing home sales. And so, as you mentioned, social distancing at its finest, looking to get more into the suburbs and rural areas. Andrew, thank you so much. Where can people find out more?
You can go to freightwaves.com/passport for all of our research. We're going to have 3 or 4 reports coming out this week. Make sure to look out for them.
And great quarter, guys.
Yeah, that came out yesterday. We talked with Seth Holm. We did some consumer stocks talking. He's one of the original creators of the show, actually came up with the name, so it was good to have him back on after a few weeks. So we talked basically about consumer stocks. It was awesome. Check it out.
Andrew, thank you so much. We appreciate it.
Welcome, man.
And thank you so much for tuning in. That's going to do for this Wednesday edition of FreightWaves Now. But as you heard, the content doesn't stop here. You can check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.